What's the number one traded stock this week and why? Stick around and we'll talk about it. Hi, this is Tim with Trading Strategy Guides. Today we're going to take a look at this week's number one traded stock and why it's number one. As usual, stick around to the end of the video and I'll share my next trading maxim. Oh yeah, and I added another one today, so the count is now 35. And no, I won't be sharing that one. We'll get to all that in just a minute. I've got a few things to touch on first. Number one, don't forget that you can speed this video up by clicking on the gear in the lower right, clicking on speed, and selecting the speed at which you want to watch. I repeat this every time for new viewers. Next thing, I want to be sure I was clear about something I said in the last video. When I say that no one really knows for sure which way the price of any instrument is going to go, I meant that. Others may try to make you think they've got some kind of crystal ball. All I've got is the historical evidence of the price chart and a clear understanding of the typical results of certain price chart patterns. Since chart patterns are driven by traders' emotions, you can reasonably be sure that price will react this time in a similar way it has reacted in the past. The reaction shows in the form of the chart patterns. These patterns are not exactly the same each time because each time they are the result of a different group of traders, but the results are typical from one pattern to another. So when we recognize a chart pattern in the chart, that gives us the statistical edge we need to enter the trade with full knowledge that the trade may do something entirely different than we anticipate. So we protect our accounts by stopping the trade out when it does the unexpected. That's what I mean when I say the market is always right, and if you don't agree with the market, then you are wrong. That does not mean that we can't have a reasonable expectation that the market will do what it has done under similar circumstances in the past. So, enough on that topic. The next issue was in the form of a question that I got at the end of last week's video. I think some of you have had some difficulty finding the WAE indicator on TradingView. So let me show you quickly how to find it. Okay, this is the TradingView chart. If you go up to the top here, you see where it says indicators, just click there. When this comes up, click right next to the magnifying glass and type WADA. And you'll see WADA Atar Explosion. Several choices. I've been using this Shizaru one. That's what the SH stands for. I have used this Lazy Bear. I kind of like this better, but they're both good. I haven't looked at the other three yet. So just click on whichever one you decide you want to use and you're good to go. I hope that helps. Now let's move on to our main topic. Okay, so what's the number one traded stock this week? I'm not going to keep you in suspense any longer. It's Goldcorp Inc. That was kind of a letdown, wasn't it? I know you were expecting to hear something like Netflix or something like that, right? So why was Goldcorp the biggest? In a word, drama. You know, I love drama. My family loves drama. Everyone loves drama, right? That's why Netflix is so huge right now. See, I figured out a way to get it back to Netflix, didn't I? So anyway, Goldcorp Inc. is a mining company that had a bunch of drama this week. And you know the market loves drama. Here's a fundamental analysis on Goldcorp. Looks to me like the fundamentals people think that you should either be buying or holding this. So, you know, the drama there this week, first of all, they announced a joint mining venture with Newmont Mining Corp, something in Nevada. Then on Tuesday, that was on Monday, and on Tuesday there was apparently an illegal union work stoppage at the Cerro Negro mine in southern Argentina on Tuesday, and then there was a huge volume on the stock pushing it up and back down. Yeah, I try to speak Spanish sometimes. Then on Wednesday, a national securities firm announced an investigation of the board of directors of Newmont Mining Corp. And, since they're doing this joint venture with Goldcorp, that's not good for Goldcorp. And then on Thursday, they did get the work resumed at the Cerro Negro mine. But, that's a huge amount of drama for one company over a week's time. Now, the truth is I'm not in a position to comment on the fundamentals. I mean, I can look at each of those things and say, well, this should be good for the company, this should be bad for the company. But to me, the variables are just far too numerous to make a trading decision based on fundamentals. So that's the reason why I stay away from fundamentals. However, drama causes volatility, and volatility causes chart movement. And that's what I'm good at, reading chart movement. I've been doing it for a long time. So let's do some of that, shall we? Okay, as usual, I'll start on the weekly chart and add some support and resistance lines. If you'd like to see just how I do these support and resistance lines, check out the Euro USD analysis video from last Monday. I'll put a link in the upper right hand corner right here and also below the video so you can check it out. I've added these lines. This pin looked like a reasonable place for a great line because it intersected with these two and the body of this candle. And then I just added these other lines that seemed appropriate at the time based on this past price action. Let's drill down to the daily chart now. As you can see, the daily chart is showing a really well-defined head and shoulders reversal pattern right up here. The most important part of the head and shoulders would be the trend in, just like all patterns, or I should say most patterns, but you want to have a really, really strong incoming trend. And we've got that right here. The first shoulder, left shoulder, forms right here at the 11.16 price, which is one of my weekly resistance levels, and you can see price is kind of stalled right up here for several days. Then it drops and it gets a little bit of a push and some momentum to break through the line, and of course as soon as it breaks through the line there are a whole bunch of long orders that trigger right here to push the price up, and then you get this double top with the this tweezer top with the people taking profit off of these longs, the ones who were anticipating the break and the others who got in after the break. Price drops back down and pushes up again to make a nice right shoulder just slightly above this 11.16. Remember what I said, that a line is never just a line, it's always a zone. So this is just extending that zone a little bit. Okay, so a head and shoulders pattern like this gives us three great trading opportunities, and the first one would be a sell signal off the right shoulder. So a sell signal is anytime you get a break or particularly a close below the prior candle, and you got a huge gap down here. I kind of hate that it gapped down so far, but still it's still a great opportunity to get short right there, and you would probably want to take some profit when it hits the neckline here, because the neckline is the traditional place where you would trade a head and shoulders pattern like this. You draw the neckline across the 2 points at the bottom of the head, and then that's your neckline, and then that neckline is typically the point at which you would go short. So your next opportunity would be a short on the close below the neckline, and then typically anytime a level is broken, you will see a retest of that level before price continues to drop. However, this is a really, really strong support level right here. You can see price gap down to here. It's held price all this time, and to get through that, it finally had to gap through on huge volume to get through this this particular point. So this is really strong support. So if you do go short on a break of this neckline, I would consider getting off some profit here and making sure the rest of your trade is break even, because it could bounce again from here. Particularly, you know, I don't usually look at what the fundamental people are saying, but yeah, you know, they're thinking buy. I'm thinking it's going to drop before buying. So, but I would also protect against that. Okay. Of course, the next opportunity is right at the neckline. If you get a nice sell signal when it retests the neckline, that's another opportunity to get short. But as I've said, if this support level holds when it comes down the first time, then I would definitely protect against price bouncing from that level again. Okay, so just keep those things in mind. I did want to point this out. See, this is the huge volume that happened Tuesday, and all I can think of is that you know, fundamental analysts will always say, well, this happened because of this. Well, all I can think of is that the shutting down of the Cerro Negro mine caused a lot of volatility in this stock on Tuesday. All this volume right here looks to me like the volume went into pushing the price down, and then the bulls pushing it back up again because of this huge wick right here. But that's the result of Tuesday's trading. So based on the chart, I would say that Goldcorp Inc. is due for a bit of downside before the upside. But who knows? It could fly straight up today. That doesn't mean we shouldn't take the short, and be sure to protect the upside. I don't have to be right to be a successful trader. I only have to follow the charts. Which brings me to a very appropriate trading maxim for today. Remember, I didn't write these maxims. Well, I didn't write most of them anyway. And they are in no particular order, just the order in which I wrote them down. So today, trading maxim number 7 was suggested by a good friend of mine in the UK by the name of Robin. Thanks, buddy. I appreciate it. Trade what you see, not what you read, hear, or think. I mean, that's really appropriate today. Use your eyes to see what the chart is telling you. Don't get caught up in any kind of bias. The chart today is a good example. The head and shoulders pattern suggests that price will drop. So we trade based upon that premise. But if price flies instead, we react properly by shutting down the trade. Don't insist on being right. You may as well insist on being broke. I might add that to my maxims too. That's pretty good, isn't it? Okay, so in case anyone cares, this beautiful aerial image is Greenville, Texas. We're about 30-ish miles northeast of Dallas, Texas. Okay, if this video helped you, please click the thumbs up below. Be sure to subscribe and hit the bell so you'll be notified when a new video is available. Have a great weekend, and I will see you next week.